Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on the Mighty River Power offer document. Here it is. We've been waiting for a while and I'm here with David Hargreaves. Now both of us are financial journalists. We've been around for a long while, particularly in my case. David's been a former chalky writer for Fairfax, and we've read through quite a few of these offer documents in our times, David. This is a doozy. I must say I haven't quite finished it yet, but it's good. And I know a lot of New Zealanders, potentially 440,000 at least, are going to be thinking about what to do with Mighty River Power. So I thought it'd be useful to have a chat about what is interesting about the document, try and explain the sorts of things people should look at, but also just to give you a quick, big hairy caveat at the start: we're not financial advisors, we're just journos and commentators. If you want some financial advice, you need to go to an authorised financial advisor to get you thinking about whether investing in shares is the right sort of thing, investing in this share is a good thing, whether you should be doing other things with your money. This really is just a discussion about the Mighty River Power offer document, and to be thinking about really investing in this thing, you need to spend some time. 260 pages of meaty stuff about buying shares, so have a go at that. But we'll try and sort of guide you through it. David, Mighty River Power, let's talk a bit about what it is, because not a lot of people know about Mighty River Power. They might have driven past power stations, but not necessarily know what is Mighty River Power.
It's quite a nicely diversified company. I mean, it's got retail through Mercury Energy and Bosco and a few other subsidiaries. It's got hydro through the Waikato River, and it's got a diversified portfolio now of geothermal assets, a new geothermal one just coming on stream this year in actual fact, and it's got about 40% of its assets now in geothermal. So most of it's in renewable energy. The geothermal balance, of course, makes it's not going to be as dependent on rainfall, although of course it's bothered by the low level of the Waikato River at the moment. It's also got some geothermal activities offshore, which are looking like a bit of a punt at the moment. They may be good, they may not be good. They're taking some losses on those at the moment, but those could come good in the future. From my perspective, it's probably the best looking of the energy companies that the government is looking to put on the block, and that's probably why they decided to come up with it first, because it might be the one that can most surprise on the upside. But having said that, you never know.
Their speciality in the last few years, and they've invested more than $1 billion, is in geothermal, which they like. Why is geothermal so good, or why is it different? How does it compare with the others?
Well, again, I think it's renewable, but it's not dependent on the weather. I think that's where they get it's more reliable, so they know it's a known thing. Yeah, hydro is, you're always worrying about a drought, as in fact they themselves are worried this year because of the Waikato River. But yeah.
So that's Mighty River Power. I always think of the Waikato River and the geothermal stuff at the top of the Waikato River. That's how I remember Mighty River Power. But just looking at the status of the offer itself, we've now got some more details about the offer range that the government is suggesting. And remember, those people who have pre-registered, you don't necessarily have to bid for the shares, but you get some advantages if you are pre-registered, in that if there is a scaling back of the offer, you get 25% more than other people. And April the 15th is when the offer opens, and people will get a chance to think about that offer range. And this is the key thing: $2.35 to $2.80. How does that feel to you, David?
It feels a little bit lighter than I might have expected they'd go for. The government will get between 1.6 billion and 1.9 billion, and certainly 1.9 billion is the figure that has been talked about, bearing in mind that they're looking for between 5 and 7 billion for all the assets that they're selling, and Meridian is the really big one. That's the key one, where they're looking to get over $3 billion for that one. But so it looks okay from that perspective. But sorry, go back to you for a sec.
Yeah, and that $2.35 to $2.80, that's one way to look at it, just as a pure number. But digging down through the valuations and how companies like Mighty River Power are valued, you look at things like price to earnings multiples, which are a way you can compare the valuation of one company with the other. And looking at the range that's there, it's a relatively high price to earnings multiple, over 24 at the top end of the range. So maybe their earnings aren't quite as strong as we were thinking.
Yeah, I think it's fair to say that the profit figures for next year don't look that good. I mean, they're forecasting a dividend of 13 cents a share for the 2014 year, which would give you a dividend yield of 4.6 to 5.5%, depending on, you know, what the final price is, which would compare quite well. But the interesting thing is that dividend would represent 107% of their profit next year.
That's really interesting about Mighty River Power.
Yes.
They go for the doctor on the dividend policy. They've got a 90% to 100% dividend policy. That says they're going to pay out all of their profit in the form of dividends, which doesn't leave a lot of room for error.
Well, that's new. I mean, they said it's something they would have gone to anyway, but I have my suspicions that they might not have. I think they were aware from the outset that they were going to have to sell themselves as a dividend yield stock, and they want that dividend yield to be as attractive as possible. So they really are going for the doctor. The profits, as we say, they don't look as good as you might have imagined. Maybe they're leaving something a little bit in the locker so that they can surprise on the upside next year. Because remember, I think the government is going to be absolutely wanting that share price to do well after the float is finished and after it lists on the stock exchange. It's going to be absolutely crucial that the share price is good, because if the share price isn't good, people are going to be turned off. I mean, you've got 440,000 people queuing up for these shares at the moment. They'll be expecting it to go well. If it doesn't go well post the float, then they'll say, when the next one comes, probably Genesis, they'll say, well, why should I bother?
Yeah, that's a really interesting thing. There's a tension there for the government. They want the best possible price, but they don't want to leave so little on the table that the price doesn't rise in the first few days. They've also got a tension here between how much they allocate to retail investors, mums and dads, who may not be heavy traders, and how much they allocate to institutional funds, both local and international, because there is a political risk for the government here that they hand over too much to the big institutional funds overseas, who then flick it on the first day for a profit, having never invested a cent of their taxpayers' money in building these things to start with.
Well, reading between the lines of the figures that they've given, you imagine that 30% of this is being targeted for offshore, although they haven't said that, and they're not going to say that clearly. I was looking for some reference in this documentation as to where it's all going to break down, but they're not going to make that decision. The government are obviously going to look at the figures and see how many people are lining up for these shares, and then they'll decide how it's allocated. And that is going to be very, very interesting to see what does actually happen.
Because there'll be a decision on May the 8th when we get the price. So it may not actually be in that 235 to 280 range. They could decide to go higher if the demand is very strong. And May the 8th will be the announcement date, and then May the 10th we'll get the news about the allocations, and that'll be really interesting. Just finally looking at some of the risks for Mighty River Power. We talked a bit about some of the overseas geothermal risks, but what are the other risks that people should be thinking about when they look at this offer?
Yeah, well, I see the Green Party co-leader Russell Norman has already come out and criticised the government as not laying out the risks enough, and I would actually tend to agree with him. I mean, we were promised before this that there would be full disclosure about the Tiwai Point aluminium smelter risks, and that, from what I can see so far in cursory reading, is 2 pages, and notes in 2 pages, and it really only says that there's a risk, it might close, and that power prices would drop. I was certainly hoping for some sort of quantification of, you know, how much you might lose. You know, because brokers, for example, have suggested that Mighty River Power could be worth $500 million less if Tiwai Point closes. Now that's makes quite a big difference in the hip pocket if you're looking at buying shares.
Because it's such a big chunk of power. 13% of the power in New Zealand is consumed by Tiwai Point. That gets dumped onto the market. You'd think that would have to have a significant impact on the power prices.
Yeah, and on the share prices of any of the companies that are floated, for sure.
And the other thing with power demand, so that's a supply risk, there's also demand risk, which people haven't been thinking a lot about in the last few years. And that's that power demand has actually flattened out in the last 3 or 4 years after the global financial crisis. And this is a break from almost a century of history where power demand has gone up in line with economic growth, or even slightly higher than that. Because people, it seems, are using more energy efficient devices, LED lights and flat screen TVs and that sort of thing. And of course we've lost a lot of factories offshore, and they can be quite heavy users of power. So there are a few risks there, aren't there, around the demand side?
Yeah, definitely. And I think that's why they are portraying this as a dividend yield stock. They're not saying profits are going to be going through the roof. They're going to say, stick these in your bottom drawer and you'll get a steady dividend. But there are risks obviously around it, and as you say, if power demand does stay flat, what does that do to the profitability in the coming years? So, you know, like everything, there's definitely a risk involved in buying.
Because the last big float on the stock market that pulled in a lot of people, a lot of retail investors, was of course Feltex, and we know how that turned out. Not that we're suggesting that will happen here, but certainly there has been a feeling in the last couple of months that this seems like a sure thing. You know, it's a way to get free money from the government, when actually there are some big risks in there that people should be reading about.
Share prices can go down and you can lose all your money.
That's right.
Hopefully not in this case, but
yeah. Excellent. Well, there you go. I'm Bernard Hickey. That was David Hargreaves. We're from interest.co.nz. A bit of an early discussion of the Mighty River Power offer document, all 257 pages, which you should really read in full if you're serious about investing in these stocks. Again, that was not financial advice. That was us just shooting the breeze about it. And keep an eye on interest.co.nz over the next few weeks as we get more news on the Mighty River Power float. Remember, May the 8th is the day when the price is announced. May the 10th is when it floats on the stock exchange. Thank you very much. I'm Bernard Hickey for interest.co.nz.